So my name is Christopher Hatch. I'm the Senior Associate of Launch Tennessee. It's good to see so many familiar faces here, folks who've joined this call before. If it's your first time, this is the Southeast Capital Call. It's a quarterly virtual event, which is designed exclusively for venture capitalists, limited partner funds, and angel investors. This investor-only event provides an unparalleled opportunity to connect with seasoned investors, explore emerging sectors in the region, in the Southeast, and more broadly, and delve into the insights of industry titans. Speaking of industry titans, we're so excited to have Jonas Murphy here, who is the Director of Government Affairs at National Venture Capital Association, and super excited for his presentation that'll be coming up here in a few minutes. The goal of this event is to offer an immersive experience that fosters connectivity, exchanges of deal flow, and the passing of invaluable insights. And so in the past year, the Southeast Capital Call has featured presentations from expert practitioners from First Cressy Ventures, 1031, Market Square Ventures, and the Tennessee Department of Community Development, just to name a few. Our attendees represent a wide range of investment theses and industries, including fintech, healthcare, AI, SaaS, media, robotics, and much more. And so we're just excited for everyone to be here, as we have attendees from Tennessee, Texas, Georgia, North Carolina, South Carolina, Virginia, New York, and California who attend these events. And so we're super excited for everyone that's joining today. And like I said, good to see so many familiar faces. And since it looks like getting a message from Eller here, she's finding a room, and so I won't steal her thunder on the welcome. However, I will go ahead and just highlight, if you guys have not bought your tickets for 3686, we would love to see you there. This is absolutely one of the best opportunities to engage with the Southeastern entrepreneurial ecosystem. 3686 is going in its 11th year and really has become one of the go-to events for Southeastern entrepreneurship, for entrepreneurs, startups, VCs, ecosystem builders, folks who work in government and policy. And one area that I know I'm particularly excited about is our matchmaking. And so we actually leverage a platform called Brella, which helps all of our attendees be able to so I'm just letting a few folks in. Let's all of our attendees be able to set up meetings with other attendees, whether you're a startup, whether you're a VC, wanting to connect with other VCs, or wanting to connect with CEOs about potential investment opportunities. It's absolutely one of my favorite things that we do as a part of this event, not to mention all of the great sessions, not to mention all of the amazing opportunities to network. Tons of parties, happy hours will be going on. We have quite a few partner pop-ups. These are opportunities for other attendees to host events that sort of get the 3686 stamp of approval. And so this year, I know there are some really incredible partner pop-ups lined up as well. And so we're really excited about this year. I did just see Eller Kelleher, our Chief Investment
Hi.
Officer, jump in the call. So I will pass to her for the official welcome.
Yes. Hi, Christopher. Sorry, I'm just a few minutes late. And hello, investors. I apologize. I am actually in Kansas City at a Federal Reserve for an SSBCI update, which is really fun. That's again the program's source of funding for Launch Tennessee's capital program, and specifically our LaunchTN fund. But just quickly to jump back to Chris's kind of update on 3686. If you have not gotten a ticket yet, I highly encourage you to do so. We actually do have a full day of investor specific programming that's happening on September 11th. So if you are limited on travel times, encourage you to maybe fly in on the 10th, snag some of the general programming on the 10th, and then stick around for the investor day. Chris and I will follow up this call with a special discount code for investor tickets that you guys can use if you haven't gotten a ticket yet. We're also doing concierge matchmaking. So if you're interested in meeting specifically with startups or other investors, our investor concierge will reach out to you if you fill out a form and help you set up those one-on-one meetings, which is great. So moving on to true welcome. Welcome. Thank you for being part of the Southeast Capital Call. Really, it is so important to us to keep in close contact with this great network. Christopher's organized a really fun conversation today. I'm excited to chime in. So welcome. Please be engaged. Ask questions if you have any questions about Launch Tennessee and our work that we're doing to make equity-based investments in Tennessee-located companies. I'm always here to answer questions, but it's really, again, great to see familiar faces. Hi, Vincent. Hi, John. And hi, Judith on the call as well. So anyway, I'm glad to see familiar faces, but also see some new faces as well. Christopher, I will really hand it back to you and let you take things away and introduce our wonderful speakers.
Awesome. Thank you so much, Eller. Very much appreciate it. Enjoy the rest of Kansas City. So as mentioned, we have a fantastic program aligned for today. We are really excited to present insights from Washington, policy outlook for early stage venture from Jonas Murphy, who's the Director of Government Affairs for the National Venture Capital Association. As I mentioned, Jonas, prior to joining NVCA in February 2020, was a legislative correspondent for Senator Robert Casey, Jr. of Pennsylvania, where he supported the senator's work on the Senate Finance Committee focusing on tax and trade policy. Jonas's portfolio also included financial services, pensions, and labor issues. Previously, he was a staff assistant in Senator Casey's office while also serving as the senator's driver in Washington, D.C. Prior to joining Senator Casey's office in January 2017, Jonas was a finance assistant for Representative Ann McLean Kuster's re-election campaign in New Hampshire. And so Jonas is also a graduate of University of Illinois at Urbana-Champaign and is very interested and happy to talk about climate, antitrust, immigration, AI, SSBCI, and Venture Pack. And so without further ado, I'm going to pass over to our esteemed guest, Mr. Jonas Murphy.
Wonderful. Thank you so much for the warm introduction, Chris. And it's great to be with you all. I'm excited to give you an update on all things happening in Washington. Certainly never a dull moment. If you wouldn't mind just advancing to the one more slide. Just some quick background on NVCA. NVCA represents the U.S. venture ecosystem in Washington, D.C. We advocate for public policies that drive U.S. venture capital and a thriving entrepreneurial ecosystem. We've been around since 1973, just celebrated our 50th anniversary. And certainly, as I said, Washington, never a dull moment. We're staying busy across many different areas, which I'll dive into now. Next slide, please. So just to quickly level set, we obviously have an election coming up, the outcome of which will significantly impact virtually all of the venture ecosystem's policy priorities. In addition to control of the White House, both chambers of Congress are in play. Democrats currently hold a very slim majority in the Senate. Republicans currently hold a very slim majority in the House. And so we could see an outcome where the White House, Senate, and House of Representatives all see a change of power after November. And so at NVCA, we're gearing up for really all possible outcomes here. And so let's now dive into some key policy areas. We've seen a number of consequential rulemakings from the Securities and Exchange Commission over the past few years. This is just a sample of 6 that we've been engaged on, covering new rules for registered investment advisors with Form PF, a highly consequential private fund rulemaking, which I'll break down a bit further shortly, a forthcoming private companies rulemaking, new disclosures on 10b5-1 plans, new beneficial ownership reporting requirements, and a new anti-money laundering rule on which the SEC has partnered with Treasury's Financial Crimes Enforcement Network, or FinCEN, recently. Next slide, please. So this has been one of our key focuses over the past really year or so. In August of 2023, the SEC adopted a series of sweeping rules that fundamentally altered longstanding, widely used business arrangements of private funds. We argued that the Commission's attempt to restructure these arrangements is unlawful, unwarranted, and ultimately harmful to investors and the broader venture ecosystem. The Commission's rules would have curbed entrepreneurialism, flexibility, and investment returns that make private funds such an attractive place to invest today. So NVCA partnered with a coalition of organizations in Washington, the Alternative Investment Management Association, American Investment Council, Managed Funds Association, and others. And we actually sued the Securities and Exchange Commission over this rule. We were pleased that in June, the Fifth Circuit Court of Appeals vacated the private funds rule, and we've learned that the SEC is not planning to further appeal the decision. So it is the rulemaking is officially dead, which is certainly great news for the venture ecosystem. Shifting gears a bit to the Federal Trade Commission and antitrust. NVCA is concerned about efforts by FTC Chair Lina Khan to refocus the FTC's enforcement efforts around acquisitions of VC-backed startups by larger technology companies. These efforts have had really a chilling effect on the startup ecosystem, making it harder for startups to be acquired, elongating the timelines for liquidity, and increasing the regulatory and legal costs of virtually all acquisitions. In our advocacy here, we highlight that for VC-backed companies, there are effectively three outcomes: standalone company, often via IPO, merger or acquisition, or number three, bankruptcy, which is unfortunately the most common outcome for startups. Obviously, many entrepreneurs and their investors begin the company building process with hopes of creating a standalone public company. However, in most cases, an IPO is not possible, and the preferred exit opportunity becomes an acquisition by another company. Ultimately, more than 10 times as many startups are acquired as complete an IPO. And we argue that these acquisitions contribute to the health of the startup ecosystem, as entrepreneurs who realize liquidity through the sale of their company regularly go on to launch new companies. Investors who realize liquidity go on to invest in new startups. And so it's really that recycling effect is a key component of what has defined the U.S. venture ecosystem. And the FTC is really throwing sand in the gears of that and making it harder for ultimately their goal is to help competition, but ultimately they are curtailing competition by having such an aggressive antitrust posture. And so one other flag as well, in last September, we submitted comments to the Department of Justice and the Federal Trade Commission regarding their proposed merger guidelines. These guidelines significantly raise the risk of small company acquisitions being blocked for theoretical reasons that have no underpinning in reality. And we're still waiting the merger guidelines are not finalized yet. We're still waiting to hear where they land there. Next slide, please. So last December, the Biden administration issued a draft framework for the National Institutes of Health and the Department of Commerce to more broadly utilize March-in rights, which reviews the factors that an agency may consider when deciding to exercise March-in rights on patents. Essentially, if this rulemaking is implemented, this will be the first time that price can be a factor in determining that a drug or other taxpayer-funded invention is not accessible to the public. It would stifle our nation's entrepreneurial ecosystem, domestic venture investment, really any startup that receives federal funding under this, if this rulemaking goes into effect, the patent could be, federal government could march in and seize that patent. So it really could have far-reaching consequences across the U.S. venture ecosystem. And so we've been engaged here. We submitted comments opposing the March-in framework. And this is also a pending rulemaking. We haven't seen a final issued yet, but the administration obviously has a couple months left. We could see this come out in the next month or two. Next slide, please. So far, I've mainly been speaking to challenges in Washington for the venture ecosystem, but there are also a number of unprecedented opportunities coming out of new programs that are being enacted from legislation that has been passed over the past couple of years. Just to highlight a couple, the State Small Business Credit Initiative, obviously, for those of you who are not familiar, was reinstated with $10 billion as part of the American Rescue Plan in 2021. And essentially, it's intended to provide capital to small businesses and startups in overlooked regions and communities, excuse me, across the country. The program was actually first created in 2010. It had a $1.5 billion funding in that time. And so this is a significant increase from that, from the first iteration of the program. Each state has received a minimum of $56 million allocated by formula across 3 tranches. And essentially, they can use it to expand existing or create new small business investment programs, including both direct and multi-fund equity venture programs. So we're excited about this program because we view it as a prime opportunity to expand access to capital in more regions and communities across the country. It's a key priority for NVCA and also Venture Forward, our 501c4 nonprofit. And I'd also be curious in sort of after we finish up this presentation, I'd be curious to hear Launch Tennessee's experience with SSBCI programs you're standing up, any issues you're encountering there. Eller, it sounds like you're at an SSBCI conference today.
I am, and it's certainly, I'm getting a ton of feedback from other equity-based, to both direct and fund-to-fund programs that are leveraging the 10 billion in SSBCI funds available. So it's a huge opportunity. And if anyone on the call doesn't have context, specifically if you're not in Tennessee and you're somewhere else, if you want to get connected to your state's SSBCI program manager, I'm here with a lot of them today, and I'm happy to make those intros. But if you're interested in investing in Tennessee, I'm your person to talk to about taking advantage of SSBCI and kind of coming in as a co-investor alongside us into great deals.
Awesome. That's great. So aside from SSBCI, there are a number of other exciting programs coming online within the Bipartisan Infrastructure Law, Inflation Reduction Act, and CHIPS and Science Act. A number of critical programs to support technology commercialization, and particularly climate technology deployment and scale up. We've been closely engaged with the Department of Energy and other really across the federal government as these programs are implemented to make sure that startups can access the programs and they're not inadvertently left out of the process, which we see, and unfortunately, across many different programs. Our experience at NVCA is that startups, there's a rule that's written that is not intended to hit startups, but it does, and it leaves them out of the process. So we're trying to make sure that issues like that don't crop up here. Next slide, please. So in the tax realm, NVCA has long been fighting against a tax on carried interest, taxes on unrealized gains, and curtailing QSBS. This timeline is just to give you a sense. Really, essentially every year, there's a new tax threat that we have to push back against. Most recently, during the Inflation Reduction Act legislative process, there was a measure included in that which would have taxed carried interest as ordinary income. And really, that would have become law had it not been for Senator Kirsten Sinema, who insisted on its removal to secure her support for the package. So we really dodged a bullet there. We are also fighting to restore immediate deductibility of the R&D tax credit. Just for those of you who aren't familiar, the 2017 Tax Cuts and Jobs Act included a provision which required the R&D credit to be amortized over 5 years instead of deducted in the year that the credits were generated, which significantly reduces the value of the credit for venture-backed startups. Earlier this year, the House passed a strong bipartisan tax package that included an R&D fix, but unfortunately, the package faces a really uphill climb in the Senate, where there's some thorny political issues which are preventing that from making progress. Unfortunately, there will be an opportunity to address R&D again in 2025, when there's a range of provisions from the 2017 Tax Cuts and Jobs Act again that expire in 2025. Really, everything's going to be on the table at that point. We could see, in addition to a possible R&D fix, we could see a lot of bad ideas crop up again here. Taxing carried interest as ordinary income, taxing unrealized gains, curtailing QSBS, etc. So we're going to be closely engaged as this process unfolds, and really to defend the venture business model. And this is just to give you a sense, we're the breadth of our policy agenda. We're engaged across so many different issues: artificial intelligence, antitrust, patents, and intellectual property, as I mentioned, Marchin, tax, capital markets, foreign investment, CFIUS issues, national security, blockchain, etc. So if there are any other issues that I did not cover today that you'd like to learn more about, let me know. But I think that concludes the end of my formal presentation, but happy to answer any questions and appreciate the time. Thank you.
Amazing. Thank you, Jonas. Yes, I mean, this is a great time for anybody on the call. Please feel free to, chime in, answer questions. Just feel free to unmute and go from there.
Yeah, it's Mike Dowdle from Circadian Ventures in Atlanta. Sorry, I'm not on video, but beneficial ownership, I'm not sure if you covered that.
Yes, that is, I don't have an update on that. I think we're still waiting. That's another one of the pending rulemakings that we're supposed to see, possibly we'll see by the end of the Biden administration. NVCA was engaged on that rulemaking, highlighting the burden that this would impose on venture funds to gather and report all this additional information, and that it really isn't necessary. It doesn't serve a valid policy objective. But let me follow up with the team and see if we have a more substantive.
Because from what I understand, it has passed, but they were like not going to enforce it till a certain date. But I'm just not certain where it stands specifically.
Yeah, let me follow up with the team. My colleague who's handling that issue, and we'll be in touch.
Thanks. So I think that the penalties are so onerous. I think that has the immediate initial largest impact on startups and funds.
Yeah, that's helpful to know. Thank you.
Any other questions from our attendees? Please don't be shy.
Jonas, I have a question just in terms of kind of maybe trends that you're seeing in terms, because again, it's a topic here at the again SSBCI focused event, which does, a lot of these state programs do both equity and loan programs. But I'm curious kind of if NVCA is seeing any trends just in that regard of like, is there a trend towards some of these some venture firms doing more kind of debt to equity, really kind of loan structures in what has been such I would say just a more difficult lending environment, which pushes more people towards equity. And if NVCA has any kind of maybe take on that.
That's a good point about the more difficult debt environment, potentially pushing folks towards equity more. I think in this iteration of SSBCI, we're seeing more generally across the board, more states have equity programs than did in SSBCI 1.0. I think that time it was very, very heavily focused on the debt side. This time, the vast majority of states have at least some sort of venture program, whether it be multi-fund or direct investment. There's a couple smaller states that just don't have the resources capacity for that, and so they only have debt programs. But and I think we're still just at the very early stages of SSBCI. We haven't really seen the funds start to be dispersed, but we're optimistic that more of the capital is going to end up going to venture equity programs this time around than debt, for sure.
Felix, I see your raised hand. Feel free to unmute.
Yeah, so hello, Chris, and Jonas. So probably this probably for you, Chris. I asked a question about the fund of funds program. I wanted to be clear whether you fund VCs that are based outside of Tennessee but want to invest in startups in Tennessee. I mean, I want that clarity so that we know who this is for before embarking on the journey.
Yeah, so I would say, well, so I can answer for Tennessee. So every state's SSBCI fund of fund, if they have a fund of funds program, is different. So when you come across one, you've come across one. You kind of have to understand each state equity fund of funds program by program. So Tennessee's fund of fund programs, no, we do not require the funds to be located in Tennessee, but we do require that every single investment that is made with Tennessee's SSBCI dollars, those companies must be located in Tennessee. And And I will say though, we have a relatively small allocation to our fund of funds program. So it is it's a very competitive process because we've got a ton of fund managers that are interested, and we're really looking for fund managers that are gonna help us achieve one of the Treasury's, federal government's goals with the SSBCI program, which is to hit certain SETI metrics. So that is investing in socially and economically disadvantaged individuals. So on top of the requirement that any Tennessee SSBCI funds have to go to Tennessee located companies, we also want to see that whoever the fund manager is that's applying is specifically has an investment thesis on SETI focused founders. A lot of nuance there, but again, I just want to iterate that it varies state to state. Some states don't have fund to fund programs. Some of the states are only direct. Some states are only fund to fund. So anyway, that's specific to Tennessee, and I know it can get into a much more nuanced conversation, but happy to share more offline if that's helpful.
Awesome. Thank you, Dollar. Any other questions, particularly related to policy and, well, we have such a robust group here. Anybody else?
I guess I'll just ask the
Thank
question
you.
that seems kind of top of mind. Obviously, we have an election coming up. So the crystal ball question, what's the outlook for, either outcome for the presidential election in terms of the policy agenda and, how bullish you might be for the future under each scenario?
Yeah. I think it's a question on everyone's mind right now. And I don't have a crystal ball, but I think there are positives and negatives with either outcome for the venture ecosystem. I think if former President Trump is reelected, we could see greater relief at the regulatory level, at the SEC, at the FTC. A lot of these rulemakings that we've been dealing with, we could see a lot of those abate. But we've also, President Trump was in 2017 very supportive of taxing carried interest as ordinary income. So we could see similar challenges on the tax front. Also, in 2017, TCJA curtailed the R&D credit. Was obviously not a priority for that administration to maintain the value of that credit for startups. So we could see challenges fixing that. So I think there's positives and negatives. If Vice President Harris is elected, we could certainly see similar challenges on the tax front. Could see a lot of the same challenges on the regulatory front at the SEC, at the FTC. I think it's a little bit of an open question whether or not she keeps most of the agency heads, including FTC Chair Lena Khan. Could see a lot of turnover. I think if I were to bet, I think a lot of those agency heads stay in place. And so, but at the same time, we could see new programs to support tech commercialization, which we saw with the Inflation Reduction Act, Bipartisan Infrastructure Law, CHIPS and Science Act, as I was mentioning. So I think there's, as I said, pluses and minuses with both, challenges and opportunities. We're kind of just trying to read the tea leaves and prepare for either outcome at NDCA. I hope that answered your question.
A great question, a great answer. And anyone else have questions here? I'm looking for any raised hands I might have missed. Well, given not hearing anyone else, and I know we've already gone past the time I asked Jonas for it. So Jonas, we just want to say thank you for spending this time with our group. The Southeast Capital Call has been absolutely amazing. And so we are super excited for the next segment. And thank you so much, Jonas.